made by one of the lower court judges, usually erroneously, the client has the option to appeal that case. However, appeals are expensive. However, when they appeal, now the bank also has to hire a different attorney, not a contract attorney. Now they have to hire the silk stockings attorney. And true. And then they spend a lot more money for those guys. Those guys charge $500–600 an hour, and they get a lot more down. So they may get $20,000–$30,000 tied up in the appeal, and then they make a business decision, and they say, wait, it probably makes more sense to settle this thing than it does to go through this appeal. So then that's when 15 grand hits the table, and they say, hey, will you guys just go away for 15 grand? And you make a decision.
They're definitely afraid of having a decision go against them.
Stu, that is a great point. The precedents, because you happen to be on the right side of this conversation, not the wrong side. You have to be on the right side, and they happen to know it. They don't want those decisions to be made because now they're used as case law in somebody else's case. And once the decision is made, the decision is made. And once it's made by, never mind the lower court, an appeals court, it gets much tougher hurdle to climb, to overcome. So they try to pull out other arguments. But the point is that you're in a much stronger position when you're purchasing property. You're in a much stronger position when you follow the guidelines, you follow the rules, you follow the steps. We've already laid this straight path to the money, baby. If you follow it the way I'm telling you to do it, you should not have any problems. Can't guarantee that, but I'm telling you, that's how it works for my students. We had one guy had his loan called. Hello, would y'all please put your phones on, in fact, just cut them off. Just cut them off. Because probably what I'm saying is a lot more important than that telephone call. How many of you would agree with him? Yeah. Well, like I'm talking about your future, the rest of your life, stuff like that. And what happened with his case, and it was GMAC. Anybody ever heard of GMAC? Yeah, they were fine. So, hello. Just get a cup of water, dip it in there. Cut it off really quick. But what happens is, in that particular case, was that the bank called the loan due. And he didn't call me. He didn't tell me it was going on. So here he is the day before the foreclosure day. The day before foreclosure, he gets in contact with me. He says, Lou, they called the loan due. I said, really? I said, what are you going to tell me about? He said, and foreclosure's tomorrow. I said, okay. So I got on the phone to the attorney that's foreclosing on the property. And I said, I'm trying to understand what's going on here. You're foreclosing on this property, and your client, GMAC, is saying that there's a due on sale clause. Please explain this to me. And he says, well, it went through the routine. And I said, well, but my understanding is that your client's been accepting payments now for 5 years. And so essentially your client has created a waiver. And now because they've been accepting payments now from my client, for 5 years, that waiver is already in effect. And if you don't stop this foreclosure now, I'm going to file a temporary restraining order. And we're going to go to court and tell the judge that there's a performing loan, that every payment's been made on time for the last 5 years. Would you like to proceed in that way? And he said, and it's just a long silence, maybe 30, 45 seconds. I'm just sitting there waiting. All of a sudden he says, I told them not to do this. That deal disappeared. The foreclosure disappeared. He never had another peep out of GMAC for all these years. It's a beautiful thing. You got it. There's ways to do this, and there's ways not to do this. Yes, sir. By the way, when you raise your hand, just tell me your name.
Rudy.
Rudy, go ahead.
in that example, who's getting the 1099 at the end of the year?
The 1099 comes in the Social Security, whomever number was used to obtain the loan in the first place. The IRS says, we don't care who is being reported on, we care who paid it. So you can produce checks that show that you made the payment, you are entitled to the interest deduction. Is that a beautiful thing? Yes,
So
that's a
the
gorgeous thing.
statement comes to you, but in someone else's name.
Correct. Statement comes to you, it's in someone else's name. In fact, that interest is being reported under someone else's number. However, you will take that and you will add that to your tax return. And in fact, we have instructions that we give you on what to do with that. My good friend Al Aiello is a master CPA, and he teaches people all over the country about some really cool stuff that's in the tax code. And it's very interesting hidden secrets in the tax code. And so we take advantage of those things, and I have you actually attach that to your tax return that gives you the code section and exactly where you're covered. Is that a good thing?
Yeah.
Absolutely. So there's code sections that address this that say that you're entitled to the interest deduction if you made the payment. Yes, sir.
Kevin,
Kevin?
if those 1099s are being generated in the other person's name and it's going to show up on their audit, if they get audited, what is done in order to protect them from having to claim that on their taxes even though they didn't pay it?
What's protecting the...
The person who the 1099s are actually going to, the person who has a loan, they get the 1099s, the IRS is going to get copies of 1099s. They got a big deal.
The IRS doesn't get upset if people don't take deductions. So in other words, they're not going to take a deduction. You are going to take a deduction.
But wouldn't they also be getting income from it?
No. You're getting the income. You're getting the income. Yeah. So it's just a deduction. Wonderful and good questions. So think about yourself. Think about your future. Think about what's possible out there in the real world. That as we evolve today through the various benefits that are available to you in trust, remember, that are not available in any other entity, we have the opportunity to take advantage of these wonderful things. And what we're going to do in the later session is actually get into the meat and potatoes. We're going to open up the system and take you step by step through setting up a trust. Is that a good thing?
Yeah.
Absolutely. So in the process of doing this, look at that. That's Hollywood. That's amazing. So you need a plan to get what you want. And as I told you, everybody begins at go. So regardless of your background, regardless of your experience, regardless of your challenges in your life, everybody right now today is beginning at exactly the same point. Whatever you've got to work with is whatever you've got to work with, and then we're going to build from there. Is that a good thing? Yeah, baby. So we can put the past behind us, and we can take advantage of some real opportunities. The challenge is that you're afraid of moving forward. How many of you are afraid of turning up the lose everything card? Are you afraid of that? Let me see your hands. Come on, get engaged with me here, baby. Then we got to get rid of those fears. Now, as we go through the training today, your opportunities are dramatic in real estate. How many of you agree that you can make a lot of money in real estate? Oh, yeah, baby. Oh. It's crazy good. It's crazy good. So we work together in revealing all those different profit centers to you, and we're going to put together a plan to have that happen. So when we come back from break, I'm going to show you the overview of the plan and how trusts fit in with that plan. Is that a good thing?
Yeah.
Have we had a good session?
Yeah.
All right, give me a hand. Yeah, baby. All right. So we're going to take a quick break. It's 10:53. Be back in your seats at 11:05. Rudy.
Much you can eat in 12 minutes. Get something to eat. If he had his lunch already with him.
You're gonna love my